Well, it is time to talk business with our partners, 2 Degrees. It looks like New Zealand's economy heads into next year with some momentum for a decent start in 2026 as GDP shows third quarter growth in nearly every sector. Garth Bray is here from Business Desk. Garth, so what do you make of the 1.1% boost? What do we see behind the numbers?
Yeah, and it's good to look behind that because obviously that's just the headline figure, right? I guess the point that Stats were putting out yesterday when they were announcing this was that was broad growth across 14 out of 16 of the sectors they measure, and that compares, I think, with decreases in 10 industries in the June quarter when things surprised on the downside. So it's a rebound, but it's a rebound that's sort of like the rising tide that lifts all boats, if you like. And particularly saw some strength there, I think, in manufacturing, which is narrowly negative for the year to date, but it was up 2.2%. In construction, that's back up in the positives a little bit, still down 3.6% for the year. And mining, which was a slight uptick to ended down 4%, but you can imagine with the news that you're probably going to hear about. I think you're talking to the chat from
we've got the boss on shortly. Next year.
You expect those mining stats to start to look pretty impressive as that money flows for investment.
So retail's still sort of struggling though, right?
Yeah, a little bit, and I guess this is the thing. It's a little bit of growth off a low base, so we're kind of not out of the hole yet.
So is this result much to crow about? I mean, we saw, Nicola Willis smiling yesterday.
You grab everything that looks like good news, don't you? You run with it. And I guess this is it's 1.3% annual growth, and so that matches the expectations. It's it's positive for the first time since the middle of 2024, and I guess you counterbalance this with some of the negative news we've had, like the dairy price drops, the performance of service indexes stuff that was suggesting that there was a bit of heat coming out of services and so on. So it's still quite a mixed picture. And I guess it's, the economy basically spent 2025 on the couch. It looks like we're getting bored and we want to get up and do something.
Yeah, we want to get cracking on the trampoline for sure. Okay, so looking overseas, the US economy surprised with a lower than expected inflation figure.
Yeah, it did, with the important proviso, and I think that they have had a shutdown, and so there's some real question marks over the data that's been collected, whether they've held some prices constant because they just haven't been able, the surveyors, to get out and see what the current data are. And so that was a 2.7% annual rate that was down from 3 in September and well below the 3.1 consensus. And that, I suppose, you didn't see a huge amount of market reaction to that, possibly because people are thinking, hey, a little bit of a pinch of salt here.
We did see a pretty big reaction from Donald Trump, though, didn't we?
Oh, but yeah, you grabbed everybody good. Well, he's getting absolutely hammered on the cost of living over there. And I think it's more than 50% of Americans think he's doing a terrible job on the economy. So he will be taking every chance, and his, the presumptive naming pick for US Fed Gov until recently was saying, oh yeah, it's a great news as well. It's great news if you believe it, I think, but I don't know if you can quite believe it yet.
I know, well, he's talking up lower petrol prices and groceries and all sorts. It's going to be the best ever, according to Trump. Okay, well, going back here, summer's coming, we're firing up the Barbies. Is it a good time to heed a warning from the gas industry? Yeah,
probably not something you can necessarily do about as you're turning a sausage, but this is the gas working group that's basically saying, we've gotten through the worst of it. We've had this, we had this real problem with gas shortages that were affecting industry and so on. Don't take your foot off that gas, though, because it's picking that there is a potentially acute energy security crisis looming 26, 27, unless we start to take some serious steps to sort of help some of those industries switch away or invest. They are saying that basically there's a potential shortfall by 2027 of around 20 petajoules of energy. What is a petajoule, you might ask?
Yeah, what is that?
About 28 million litres of unleaded would have about the same energy as 1 petajoule. So if you're talking about that amount of energy being sucked out of the economy, your greenhouses, your factories, your places that are going to hire people and keep the wheels running, they need to find that from somewhere.
Okay, Garth, we always appreciate your analysis, and I think you'll be back later on in the program anyway, so we will see you back again soon. That is Garth Bray, of course, from Business Desk, and we talk business every day with our partners, 2 Degrees.